information is everywhere. What you can't get is wisdom, experience, right? You can look and analyze a set of numbers, data, facts, demographics, but knowing what to do with it and how to take that data and apply it to an underwriting situation, a pro forma on something you're about to buy. You can't just get that online. That comes from experience. That comes from working with somebody or along somebody. You can get it if you go work at a commercial real estate company and you got the senior guy there and you're the junior guy and you're learning, all along. Or if you're out on your own, you get it through a mentorship, right? So that's where the wisdom and the knowledge comes from.
Welcome to the Peak Profits Podcast, your guide to maximizing returns in passive real estate investing. Hosted by Brian Morris and Chris Ward of 7 Peak Capital, we dive into conversations with industry experts, sharing insights, strategies, and stories to elevate your investment portfolio. Whether you're a seasoned investor or just starting out, this podcast is designed to give you the edge for financial freedom. Get ready to unlock new opportunities, discover the secrets of successful investing, and take your passive real estate investments to the next level. Let's get started and reach those peak profits together.
Welcome back to the Peak Profits Podcast. Today's guest is Joe Downs, a lifelong entrepreneur and the driving force behind Bellrose Storage Group. From finance and mortgages to hospitality and real estate, Joe's journey ultimately led him to the world of self-storage, where he's not just building a portfolio, he's building pathways for others to become storage facility owners. Under his leadership, Bellrose has evolved into a full-service firm offering acquisition, development, and consulting services in one of real estate's most recession-resistant sectors. That's a tongue twister there. But Joe, welcome to the show. It's great to have you on. We're excited to have you here.
I'm glad you had to say that, not me. Yeah, that's tough. Thank you for having me, guys. Really, really excited about talking to you guys this morning.
Of course. No, we're excited to have you on. I know you're also a Pennsylvania native like myself. So we're excited to chat and get into your story a little bit. So can you go into a little bit more detail than what I covered there in the intro?
Yeah. It's funny you said I'm a lifelong entrepreneur. I think it took me most of my life to realize that. I was actually talking about that recently. The clues were there along the way, but I'm just a guy who's an idiot, right? Like the rest of us. So you don't necessarily pay attention to your surroundings and including your own mental surrounding, right? So yeah, the clues were always there. I was always working, doing something. I was the lead ad salesman for the playbook in grade school type of thing. I was always out doing something, mowing lawns, caddying, selling kindling, shoveling driveways as a kid. Probably because I grew up, in a big family as one of 12. It was just kind of, you were pushed out the door and said, go work because there's no money here. We had a lot of kids, no money. And then, I kind of always had a career in some sort of sales, or if it was sales, it was more like business building sales. Like I was a financial advisor for years where you're going out and building your own book of business. I did radio sales for a period of time. That's actually was my bridge into real estate, believe it or not. In between, I opened a bar and restaurant. Really, the bar, but I had to have a restaurant. And what, like I said a minute ago, I was a dumb guy to what I mean. Come on, both of you, if you admit it, thought about it.
Yeah.
Bar, right? At some point,
Yeah. You mentioned it has to be a restaurant. You probably just like sold some French fries or something just to have a menu, right?
well,
But
so this was a Villanova college bar that was shut down that I bartended at because, of course, while I was a financial advisor and had a full-time job, I still had a secondary job of bartending, which was great. It was in my 20s. And the bar got shut down, and the owners came to me and said, "Look, we want to reopen it, but we can't own it. Do you want to own it?" So they backed it. I put up money. We rebuilt the thing to make it more like a pub. It was a classic college bar with no kitchen, right? They took the kitchen out from when they opened it, put a pool table in. It was like
you had an air fryer behind the
yeah,
bar.
we're gonna run on jug night, like, fish balls, like, it was a college bar. I don't think the Pope was there, it wasn't open then, but it was a college bar, and so we had to turn it into more of, like, a local pub, bar, and restaurant, and, this was my first real business lesson in life, which was I ran the front of the house great, bar, I mean, I had that down because I bartended for years, but the kitchen, that's where, It was a necessary evil, but that's where what can put you out of business is not managing that kitchen. I had no experience doing that. And so because I didn't understand what needed to happen on the other side of that wall, like or the doors into the kitchen, I was ultimately not successful and lost it and lost, 100 grand, which at that age was a lot of money. What's that today? 1 year of college or 2 years of college? So I got 10 years of college in 1 year. And it was an incredible lesson. One I swore I would never a mistake I'd never make again and then repeated it. And it'll cost me more money, but at least I caught it quicker. It was a bigger mistake at a, bigger time. But that was incredible life lesson, certainly from an entrepreneur standpoint. And, after that failure, that's when I went into radio. I had to reinvent. My life has been a series of reinventions, although I'm getting better each time.
I think
Most of them out of my control. The bar, maybe, yeah, I could say that was in my control, and the radio was just a placeholder. It was just a place I went to where I tried to, lick my wounds and gather my self esteem again, and try to get back out there. And that was, you might be wondering, well, how did you go from there to real estate? One of my clients was a company called Real Estate Riches, and they were advertising on the radio. Remember, this is pre. It's not pre-internet, but it's pre-podcast. It's pre, information age we live in today. Information was out there, but it wasn't really where people went for it yet. I mean, I still had an AOL address at the time, and no offense to anybody that still does, but you know what I mean, if you know what I mean. But so people were listening to AM radio a lot, right? So we had these companies advertising on AM radio. I worked at a talk radio station, conservative talk radio station. So it was the right target audience, right? So this company, Real Estate Riches, was putting on seminars it was like a Tuesday, Wednesday night or whatever it was. And we would do it once a month, but they would advertise 3 weeks before it on the radio. And their seminars, they would get like 100 people each one. And their goal was to walk out of there selling 20 mentorships for $5,000. And what they were teaching people was how to find, evaluate, rehab, and either flip or rent single family homes. Your basic entree into real estate, right? So everybody's kind of first step, dipping the toe in the water. And here they were, my client, for like a year, and I'm at these seminars all the time. I finally was like, I've wanted to get in real estate. I've started to build up some cash again. I'm going to take the plunge. And so now I had 3 jobs because I was selling radio, bartending, and because I still bartended another bar with Stowe Spieth, you were speaking of earlier. And, and then now I'm Saturday and Sunday mornings, out there, streets of Philadelphia with an agent. We set up, properties to say to go find properties to actually at the time, because I didn't have a lot of money, wholesale. So I started wholesaling, and then, rehabbing and flipping and renting. I don't remember which was first, but had them all going on at the same time. And I was like 29, 30, 31. So I was just go, go, go. So I guess there was another sign I was kind of an entrepreneur. I was just like, just staying after it. And then another client came along that was selling high-end condos, right? Just outside of Philadelphia on the suburban side, which meant you weren't paying city wage taxes, but you were right there, easy access to the city. And they advertised those on the radio as well to come visit to the demo unit, right? And in that conversation, that led me to his name is Jamie Santora. He's still my broker today. I have my license with him, and he said, "You got to meet my buddy who has a 1031 exchange commercial real estate syndication company." And I don't know what any of that means, but sure, let's go meet him. So I went and met him, and he needed a sales guy, and we were selling the securities. I had a securities background. You just never know. It was a little bit, almost a mini Slumdog Millionaire, like the moon's aligned. I was the right guy. And next thing you know, I'm learning commercial real estate and I ended up raising over a couple of years, like 90 some $1 million in 1031 exchange money for multifamily office, a little bit of hotel, and a debt fund, as I was in that industry. That was my entree into, I was in real estate, but it was on the residential side. This is my entree into the commercial side. And it was a little different. It was like a backdoor into commercial. I didn't come in through the normal channels, but it was also at the point where I realized, my goodness, there's nothing I can't do. I don't mean that from like a blue pill type of thing, but like it's not that difficult. right? A dumb guy like me can learn commercial real estate and the nuances of it, and I can find a way. And 2008 or 9 came, and that industry was. Remember, I said my life was a series of reinventions. 2008 and 9 came, boom, industry gone. Now what are you going to do? I got to reinvent again. I'm married. We just had a child. Thank God my wife has a great job because I didn't make money for a year and a half. I mean, ben 20, 30, 40 grand a year, like nothing. And for a year and a half, maybe 2 years. And then finally, during that time, met a guy who lived near me. So I was at a tax lien seminar, just trying to find the next thing. And we stumbled upon distressed debt, in particular, residential second mortgages. Everybody told us we were crazy, we were nuts, you shouldn't do it. People that should know better. And I'm a curious person. I mean, the Ted Lasso scene with where he's throwing darts and he tells the whole Walt Whitman story that be curious, not judgmental. That's me. So not that I want to run into a burning building or, follow sheep off a cliff or something, but I am curious. Like I'll walk to the edge of the cliff and take a look and see, is it just a step down or is it death? So that that got me and us interested in it, and I went and learned, like, wait a second, these guys are selling these they're buying them non-performing and selling them as reperforming. So they get them basically today, which is called a loan mod. We called it different things then. But we were basically loan modding these things. And we were buying the loan mods at 20, 25% yields. I'm like, well, if I'm able to buy it at that yield, what is the yield when it's not performing? What are they selling us? And sure enough, it was like a 50, 100%. So we launched into that business, still have it 15, 16 years later. We are probably one of the largest buyers of distressed second mortgages in the country, which is to say, we are a very big fish in the world's smallest pond. It's like the tiniest little niche. It's a niche and I love it and it makes us money, but it's a really tiny niche. So I say all that with humility. And in either case, we also realized as we were building a business, it wasn't a business because we couldn't control when the banks were going to sell. Because when the CFPB was created, there was a period of time for 3 years where the banks just said it wasn't worth it to sell any of their distressed debt. They had billions of it and they didn't want to sell it. So we had to reinvent again. And so during that time, I love the world I'm in. I'm never going back. I'm completely unemployable today anywhere else. But we'd reinvent again. So somewhere along the way, I got an email about self storage. I didn't know the first thing about it. Never rented it. If you'd asked me at the time, I probably would have said, "Isn't it those buildings with the orange doors?" That's the extent of my knowledge of self storage. All the commercial real estate conferences ever, never a self storage operator. We saw everything but that. At
What
the
year was that?
2004, 5, 6, 7, 8, never saw self storage anywhere at our conferences. And these are commercial real estate investment type of conferences. The reason I opened the email, it said real estate, no tenants, toilets, and trash. That's false, but it got me to open the email, and it was what was in the body of the email that was so interesting to me. That I'll address the tenants, toilets, and trash for a second. The tenants, false. We need tenants. That's the lifeblood of the business. But I get what the point is, meaning no residential tenants. You're not dealing with their stuff, with their issues, I should say, because we actually in storage, we're not landlords. We don't take custody or bailey of your goods. So we just give you a place to store stuff. So we're not a landlord. So that's what it means by no tenants. No toilets for sure. We don't deal with toilets. Trash. Sometimes they leave trash. Let's be honest. They're storing trash. I mean, treasures. It's treasures to them, but it's really not really worth much, right? So we do kind of need the trash and the tenants. But what was interesting in the email was this caught my eye because I'm in an esoteric business in distressed debt, residential second mortgages. That's like as esoteric as it gets in the distressed debt world. What caught my attention in the body of the email was at the time, the email said, and today the number is a little less, but at the time it said 80% of all storage facilities are owned by mom and pops. 80%. Now, as I'm reading this email, I'm thinking about self storage. I'm like, wow, I would have thought CubeSmart, Public, and Extra Space owned 80% of all self storage facilities. It's the other way around. That was interesting to me. That meant dislocation, fragmentation of information, meant kind of wild, wild west, which was what we were used to in the distressed second mortgage world. And that, what in my experience, that's where you can create opportunity. Walk to the edge of the cliff and you see it's only a step down and there's gold on the other side. If you've taken the precautions and really understand what those steps are, this could be a gold mine. So that caught my attention. I went to a self storage academy that I was invited to. Actually, I bought this. I'm curious, so I bought the at home course or a self study course, whatever they call it. And it was like $1,500 or something. I think it even came with like the CDs, DVDs. My computer didn't even take a DVD at the time. It's like one of the like the guy is an education business, but he was more of an operator than an educator. Like, it wasn't flashy, fancy, Robert Kiyosaki. It wasn't that. It was this plain, but this is the best we can do because we're storage guys. So it's one of those. But I appreciated that, right? Read the whole course. I'm like, my blood's flowing now. I'm interested. But I didn't want to fly. They had these academies where you could come and for 3 days and learn more about. So I waited like a year and a half, 2 years, because I didn't want to make the commitment. I'm kicking myself knowing that today, because they finally came to Philadelphia to do their roadshow academy, and they called me and were like, "Look, you paid for this 2 years ago. It's free. You might as well come." And I was like, "Yeah, all right, that's a good idea." So I went, and I walked out of there blown away. And then the distressed debt business kind of came back. And when Trump was elected, the CPB, this is the first time, the CPB kind of lost a lot of its power. Banks started to feel like they could sell again. We started to be able to buy and make money again. And that was the catalyst for me to jump into the self storage business. And we went through a mentorship program. And now I sit here before you today as someone who speaks at this academy. It blows me away. We took over the mentorship program. We run the whole thing now, myself and my company. And I think we've, tweaked it we've modernized it a little bit. The materials could still use some polishing, but it's not, it's an education company, not a marketing company. That's what I try to tell people. And so it's been wild. It's crazy to think that, we've bought 20 facilities to this point. We manage over 4,800 units across those facilities, like 50 million in acquisitions. It's just nuts. I think it's 750,000 ish square feet. It's just kind of crazy to think that, 6 years ago, I was reading an email, or 7 years ago, I was reading an email about something I'd never heard of. And, here we are today, doing what we're doing it, and we love it. It's fun. We teach people how to do it. And I feel like I've been talking a lot, and you guys are probably like, would you shut up? But I've just got a lot to share. If I don't know which direction you guys want to go in.
Yeah, no, Joe, that was absolutely incredible. I think something that really jumps out to me is the kind of consistent reinventing yourself. I think that's a really, really powerful message because, like everything, life goes in cycles, markets go in cycles, there's ups and downs. I think there's an illustration where they say that you don't get from here to here with a straight line. You're kind of wiggling all over the place, and eventually you get all the way to the top. And your story really personifies exactly that, of there's going to be ups and downs, but if you really do stick at it, you will get to where you ultimately want to be, and probably beyond. I'm sure when you look back, you weren't expecting to have kind of 4,800 units, 750,000 square feet of self-storage. And the other thing I think as well, Joe, is you're almost probably an early adopter of kind of mentorship programs. We speak to a lot of people on the podcast, and Brian and myself have also gone through mentorship programs, and really outside of college education, really investing back in yourself. And you've obviously done that with the DVDs, whether it was flashy or not, it ultimately gave you that foundation, that knowledge when podcasts weren't a thing. We hear a lot of people talk about kind of YouTube University, where you're watching the videos, you're educating yourself, but having a mentorship program in place as well is extremely important. So can you just talk a little bit about the mentorship program that you have and that you manage, and how people can ultimately get involved in that? Because we've not had anybody on the podcast yet who is in the self-storage space. So it'd be great to hear from you kind of why self-storage, why it's so powerful, and how people can ultimately get started in self-storage, either with you, with somebody else, and really kind of just talk about why it's such a powerful asset.
Yeah, absolutely. I want to rewind to one thing you just said about the reinventing. There's a visual that we've probably all seen on Facebook or wherever of two marbles being dropped at the same time, and one takes on a track, and one takes the direct to the bottom path, and the other goes like this. And it's the one that goes like this that reaches the bottom first.
Because the hills give it momentum.
Sure, but if you take that, yes, obviously, right. But if you take that analogy into the real world life, it's those experiences on the downturns that are helping shape and mold your growth pattern on the upturn, right? So on the upswing, I mean. So I think while they're look, I've had a series of setbacks, no doubt, and some of them were costly.
It help give you momentum.
I'm even dealing with another kind of one right now, but it's it's a setback on an upswing, and it's not gonna put us out of bit it's not, it's not anything that major because 'cause we've weathered so much before. So, I just wanted to highlight that because when you were saying that, I didn't really think about it that way, but that visual came to mind. In terms of mentorship, yeah, not only did I pay for the home study course, we hired a mentor through the program. And that's when you go to the Self-Storage Academy, it's the Scott Myers Self-Storage Investing Academy is the name of it, if anyone wants to Google it. And he's the only one that's really out there. I know there's other competitors that are teaching people how to do self-storage. One, I think, is mostly just a podcast and a mastermind. I'm not really sure. And then I think there's two others that are kind of former Scott Myers students that have started on their own. But so he's the longest doing it. And the mentorship is when you go to the academy, you can walk out of there. There's enough information to walk out of there and try on your own. I think you'd be crazy to do it. The amount of mistakes we would have made, I wouldn't be here today if we tried to do it on our own because we would have made mistakes. In fact, one of the first things I tell people when speaking at the academy is, I ask a question, or I ask people, I don't like the whole raise your hand. This I do it once. Raise your hand if you think a tomato is a fruit. Raise your hand if you think it's a vegetable, right? Most people know it's a fruit, although there's some people that still raise their hand for vegetable. But so I'd say that's knowledge, right? You can get that knowledge anywhere. We live in the information age. The YouTube University is going to be, Oxford College soon because of whatever it's going to be named AI University, right? That's the age that we live in. Information is everywhere. What you can't get is wisdom, experience, right? You can look and analyze a set of numbers, data, facts, demographics, but knowing what to do with it and how to take that data and apply it to an underwriting situation, a pro forma on something you're about to buy. You can't just get that online. That comes from experience. That comes from working with somebody or along somebody. You can get it if you go work at a commercial real estate company and you got the senior guy there and you're the junior guy and you're learning, all along. Or if you're out on your own, you get it through a mentorship, right? So that's where the wisdom and the knowledge comes from. You know, that's in my example with like, what does this have to do with the tomato, right? So I would say knowledge is tomato is a fruit. We all agree with that, right? You can find that anywhere. What you can't get is the wisdom to know not to put it in a fruit salad, right? You don't get that on the internet, right? So I mean, you can now, but you get the point, right? So that's wisdom. It's knowing how to apply that knowledge or not. A lot of times what we're doing in a mentorship is saving them from potential bankruptcy, right? Right? If you make a bad decision on a deal, it could hurt you. Um, that's what it is. But why do I like it now to answer your question or why am I so excited about it now is I wish I started earlier, but that's just because of what I know now. What I know now though is that at least at least 20,000 storage facilities are owned by mom and pops, at least. That are there's more than that, but there's 20,000 at least that are owned by mom and pops. And mom and pop is someone who owns like 3 or less, right? That are under $1.5 million in acquisition. That would cost, half a million to 1.5 million. Let's just 400,000 to 1.5. At least 20,000 out there. So from a bite-sized standpoint, if I'm going to buy a self-storage facility, boy, that's attainable, right? It's not a 6 million, it's not 10 million, it's 1.5 million, a million, 600 grand. That sounds like, and if your audience is like, well, that still sounds like a lot. I'll explain to you why in a second it's not. So that's attainable. There's a lot of them out there. And guess what's all going to happen to all of them in the next 10 years? They're all going to change hands. Why? Because the owners of these facilities are all 65 years and older. There's 2.4 million businesses that are going to change hands in the next 10 years. Profitable cash flowing businesses in this country because they're owned by baby boomers who are all going to be hitting 75 and 80 years old in the next 10 years, right? So they're changing hands. At least 20,000 of them are self storage. Why do I love self storage? Why do I love this for your listening audience today? And by the way, for us and everyone we're mentoring, you've got the opportunity that's changing hands. It's commercial real estate, but it's not an investment. It's a business. Here's the difference. With self-storage, because it's a business, we can use, and your listening audience can use, and we coach students to use this all the time. You can use SBA loans to buy commercial real estate, hotels, self-storage, couple other, you start getting into the other categories when you're looking up, like bowling alleys and, what I'm sure pickleball courts today, right? But actual commercial real estate, like feels like commercial real estate, self-storage, right? And you can use SBA loans, which means what? We can buy them with 10% down. Maybe 15, maybe 20, that'll depend on the deal, but up to 10%. Where else can you get financing if you're in residential or commercial real estate at 90% loan to value? Hotel, but that's it, right? Multifamily? No. 75, 70, and you're not using SBA. So if I'm buying, let's take a $700,000 facility. I now only need, I'll walk you through the numbers, but my down payment is now only $70,000. Now all of a sudden that's obtainable, isn't it? If I'm going to buy a $300,000 house and flip it, I probably need at least 150 of cash, right? Down payment plus, rehab. You got to stay ahead of the lender. What's your project? What's your rehab project going to be? 70 grand plus closing costs, so I probably need 150, right? Total. But that's the same amount I would need to flip a residential property. How much am I making in a residential property? 50, 100?
$100 a door. Yeah.
Right? I can buy a $700,000 self-storage facility from a mom and pop, and 3 to 5 years later, I could probably profit between $250 and $500,000 on it. You're not doing that in residential. And that's if you want to sell it. What if you just want to hold it for the cash flow? You're talking real cash flow, not what's a single family when you go. I'm trying to think back to my old days. I don't know what the bogey is today, but it used to be like 250 to $400 a month, right? It was like, all right,
Yes.
decent. So call it 300 a month. That's $3,600 a year if nothing goes wrong. And that never happens. And we know that, right? And that's assuming it's rented all 12 months and nothing breaks and we have no issues, right? We made $3,600. And we dealt with what? How many headaches and nonsense and all that, right? 3,600, that should be your net cash flow in a month from a self-storage facility in the example I just talked about. So it's not only obtainable, you can make so much more money. And it's not where you sit today, wherever you, and driving in a car, mowing your lawn, listening to this. Yes, I can fully appreciate that it sounds like climbing Mount Everest right now. You don't know the first thing about it. I was where you were 6 years ago. Trust me, I know how you feel. I can tell you, I did not graduate from high school or college with any super degrees or special recognition. I was not on stage as valedictorian. I'm trying to tell you, I'm not I'm not dumb, but I'm not the smartest guy you're going to meet. I'm not launching rockets into space, or I guess now catching them from space, right? But
Einstein.
yeah, it's not me. My last name is not Musk. You can do this. You just need a little bit of education and a mentor, and it can open up unbelievable doors for you.
Yeah, that's an awesome story. And I want to dig into that hypothetical $700,000 example so we can kind of visualize what a property like this looks like. You mentioned $700,000, $70,000 down payment. What are terms look like with an SBA loan? Is there balloon payments like typical to what you might see in a multifamily or a commercial? And then what is a structure look like within a self storage facility? As to Chris and I, we've never invested in self storage. We talk to people in the industry just through our network that invest in them, believe in them heavily. Right? It's an intriguing asset class for sure. Can you help us understand the numbers behind a self storage facility and how that breaks down?
Yeah. So first question was you asked a question about the loan, right?
Financing.
Finance. So I mean, you're going to need to have decent credit. You're going to apply for an SBA loan through not through any lender, by the way, through a very specialized banks that specialize in self storage too. The reason for that is not because your local bank can't do it. It's just that it won't feel like a smooth process. It might take 6 months, and you might lose the deal. You go through a bank like Live Oak Bank, where this is what they do all day. The whole process will just feel like a regular commercial loan. The structure is going to feel like a regular commercial loan, other than you're going to be 10% down instead of 25 or 30. Your interest rate will be slightly higher today. That doesn't mean it's always higher. There was a time 15 years ago where SBA loans were at the same level as your standard commercial loan, or even less. Today they're slightly higher. All right, there's different benchmarks they use. It's not that big a deal. By the way, you're underwriting the deal that you're looking at to buy with the knowledge of what the loan's going to be anyway. So it's not like you're going to be surprised. If the terms of the loan don't work in the deal, we're going to move on to the next deal. So in terms of the terms of the loan, there is typically a prepay, which doesn't come into really to factor because you're holding it for 3 to 5 years anyway. You're a 5 year term. I'm sorry. You're a 5 year, yeah, you're a 5 year term on the first mortgage. This SBA loan is two. You don't have to worry about this, right? Your lender takes care of all this. To you, it's one loan, it's one payment. Behind the scenes, it's really two loans. It's a first lender at a 50% LTV, and then the SBA sells a debenture into the secondary market as a security. Don't worry about all that. They each have a 20 and 25-year amortization, so call it like a blended 22. It's usually like a 50%, 35, 40%. So that's why it's not 50-50 on the there's two different rates, so you have a blended rate. It's not 50-50, but it's close enough. You can do the math on it. Process is very similar. And at bankruptcy, you got to be a citizen, decent credit, not much different than your traditional bank financing. So that was on the loan. What was the second part of the question? I'm sorry.
And then when you take over the property, what does that process look like from like an income standpoint, right? How many units on average would $700,000 self-storage?
Yeah, I'm gonna give you a range because it could depend on where we are in the country, and rates are gonna drive the value. Really, net operating income is gonna drive the value, but that's gonna be determined by your rates, which is our revenue less our expenses. I would say a range would be for 700,000 purchase price, we're looking at, I don't know, 10,000 square feet on the smaller side. If we say our average unit size is 100 square feet, it's probably a little less than that. But if we say it's an average of 100 square feet, 10,000 square feet is, or 100 square feet, yeah, 10,000 square feet is 100 units. So maybe up to 20,000 square feet. I think at 20, we're probably over a million. So probably 10 to 15,000. So 100 to 150 units, give or take. And then what you're going to typically find is that those that's on the in the world of self-storage, that's on the really smaller size. So there's an expression I love too, which is, if you want to play Tiger Woods at something, you can, just don't play him in golf, right? Or if you want to beat him at something, you can, just don't play him in golf, right? Although we're getting closer and closer to be able to like closing that gap. We need it. We need another
You can play with one arm and no legs and still
him
beat
hurt
us.
another leg, and then we'll have a match. So for us, the Tiger Woods are the REITs, and of course all the institutional players you guys have never heard of, no one's ever heard of, because their names aren't on the buildings, but they own them, right? So even Bellrose, we're a boutique firm. We don't try to compete with them. So I'm staying in markets and in facility sizes. I'm targeting markets and facility sizes, I should say, that is too small for them, right? I don't want to compete with them. So you're in that smaller bandwidth, but in that smaller bandwidth is where all the mismanagement from the mom and pops take place. Mismanagement equals opportunity. So that's why we can create so much value. I mean, It would not be unheard of to take a $700,000 acquisition and 3 to 4 years later, maybe 5 years later, sell it for a million, 1.1, 1.2. Not at all uncommon. You know, all the time.
Yeah, we see a similar value add type of strategy, if you will, within multifamily by, going in, underperforming asset, bringing the rents of these units up to market where they should be, minimizing expenses as well as you can, right? It's a similar strategy, I'd imagine. So if you have, hypothetically, in this situation, 100 self-storage units, now, what's a typical rent? Would it be like $25 a unit? Are you looking to drive that to like $32 a month instead to drive NOI? Are you looking to decrease expenses? What are some of the expenses within a property like this? Can you help us understand those numbers?
Questions. It's gonna be hard to give you a standard rent per square foot because I mean, give you a national average. It really does depend. Storage is local. It's a 135 market. So even in pick a city like Atlanta, northwest suburb, we might be getting $1 a foot in a unit. Where in southwest, closer to Alabama, we might be getting 50 cents a foot. But there's a pretty wide range. I'd say, your national average is probably 75, 80 cents a foot. And yes, we are trying to take that and grow it towards that dollar. If I buy it for 75, I'm trying to get 75 cents a foot. I have to have believed in my due diligence, I can take that to $1. If I don't think I can take 75 cents to $1, I'm probably not buying it. Right. Or I'm going to, I'm going to offer something much lower than what the seller wants. I have to believe that I can make money on it. So it's either I can drive the rates or I can buy it for less than it's actually worth in the market. It's usually we're buying a fair market value, I'd say, is typically what's happening. And then we're actually adding the value. So
See
the value's not
upside.
really made at the you say in real estate, we say you make your money on the buy, and that's true. We're certainly trying to get them undervalue, perceive as the value, and often do by a certain percentage. But really what we're doing is recognizing that the operation isn't as effective as it could be. And we're bringing that expertise and creating the value through management. And that's what's interesting is so yes, said do you cut a lot of expenses? No. We usually add expenses because the reason they're not generating the revenue they should be is because they don't have a website or they're not spending money on marketing or stuff like that. So we actually probably, in most cases, will either, if we didn't increase it, we shifted it from wasteful, get rid of a manager who's not doing anything because we can manage these things remotely with technology and replace those dollars with marketing dollars. Or we're just coming in and increasing the marketing dollars. But what we're doing is driving the revenue. So the whole goal is to drive the revenue, control expenses, drive the revenue.
And those are all really good points and really informational. And so keep going back to this 100 unit. What is ideally perfect situation? You have all 100 units rented for $1 per square foot, maximized to the max, right? But what's on average the amount of units in a self-storage facility that are always occupied? I can imagine it fluctuates a bit. There's probably some sticky tenants there that, almost forget that they have a unit or just keep that unit for years and they haven't even gone to open it, right? You've probably seen that.
It's like
So
the
what on average is like the occupancy of the units filled?
Yeah, so that depends on the market, local market, but also the environment we're in. So during COVID, that average was probably 98%. COVID was the greatest thing that ever happened to self storage. And then post COVID was one of the worst things that ever happened to self storage, which, by the way, is another reason why it's a phenomenal reason to buy. It's because you're buying trailing 12s, right? We're buying the past performance. So everyone's past performance is well below where it will be next year, right? As the economy starts to still pick back up. So it's another all storage is on sale, if you ask me. Um, you stabilized it historically at like 87 and a half, call it 88% occupancy is what we call stabilized at 88% or 90% where we like to be. Then you can start driving rates. So first thing you want to do is get stabilized. Once you're stabilized, if you aren't stabilized, you want to probably drop rates, get occupancy, then you can start to grow rates again because you nailed it. People either forget they have storage or there's never a good time to not have storage anymore. You ever try to cancel a gym membership?
Too
It's hard.
often.
You got to go in and do it in person. First, they offer you a discount on to stay, then they shame you, right? It's a pain in the ass, and there's never a good time to do it. And it's one of those things where like if you first of all, if you remember it's hitting your credit card, right? So like Planet Fitness is hitting you for 19.99 a month or whatever. I don't they I could be paying for it right now. Wouldn't have any idea because I don't look at my statement that closely, right? So that's similar in storage. However, at $100 a month, you're probably paying more attention to it. That said, when is a good time to cancel? Right? You've got a 10 by 10 full of treasures. When is a good time to move those treasures somewhere? Right? So first of the month, you just made the payment. So are we doing it then? We just paid for the month. Let's do it next weekend or 2 weeks from now because little Johnny's got a baseball game or whatever. It's raining. Oh, we're gonna have to rent a truck. Oh, we got that graduation party. We got this to do. There's never a good time to move out of a storage unit unless that was part of the like it's just transactional. I'm moving. I need it for 3 months. I'm moving. Then boom. We have that. But the people that move in that are there that just it's just extra storage. It's their second garage or whatever. They're there for a long time, and there's never a good time to move.
Well, this has been incredible so far, Joe. I feel like we may need to have a second session with you on this stuff. Just the amount of detail in this first 40 minutes that we've gone through. I have a ton of questions, but I think we should probably get you back on. Where can people find you? Where can they find Bellrose? Like, can you give everyone kind of a high level where they can find you, and we will get you back on to kind of dive into a little bit more around self-storage. Like I said, this is the first time we've had someone on. I think Brian, I can see Brian's brain is churning there as well. We have a million more questions that we want to go through. So where can everybody find you? And then we'll get a second session set up.
Absolutely. Before I give that, I want to commend you both for having a podcast because when I was just thinking about, as you were saying that, when I was driving around my third job, looking at real estate on Saturday and Sunday mornings, I didn't have a podcast to listen to introduce me to ideas like self-storage, because I probably would have stopped doing that back then. I think I was right. Anyway, our company's bellrosegroup.com. Actually, sorry, it's Bellrose GRP, bellrosegrp.com. And you can reach me at joe@bellroseam.com. And you could also, well, actually, just email me there. Any questions? I'm happy to field any questions. And if you're interested in the Self-Storage Academy, love to see you there and point you in that direction as well.
Perfect. We'll put all of those links into the description of this as well. Joe, will definitely get you back on for another episode because I think there's so much more for us to uncover. Definitely an asset class that we hear a lot of people talking about. And it's definitely, like you said, something that people either don't think about is an opportunity for them to come in and own with SBA loans and things like that. But do just want to say a huge thank you for joining us.
All right. Thank you so much for having me, guys. I appreciate it. It was fun.
Thanks, Jake. Talk again soon.
Thank you for tuning in to the Peak Profits Podcast. We hope today's episode was not only inspiring, but packed with actionable insights for your passive real estate investments. Subscribe so you never miss an episode. And if you enjoyed the show, please leave us a review. Your feedback fuels our passion to bring you even more valuable content. Stay connected with us on social media and visit 7peakcapital.com for exclusive resources and updates. Until next time, keep striving towards your financial goals and let's reach new peaks together.